Hi Masterminds, hope you're really well. Welcome to today's Monday market update. I think we're in the sweet spot for the market. I think we are just about to launch into the meat of this bull market, and the anticipation is building. You're already seeing it in some of the altcoins that are beginning to pop and making some really, really strong moves. My basic thesis is if Bitcoin is holding ground and remaining still, while ETH is looking robust and starting to move forward, and you're seeing Bitcoin dominance fall over, then altcoins have a clear runway to absolutely run. So that's what we're sort of seeing at this stage. With Bitcoin though, under that 100K, there's a bit of hesitancy, a bit of disbelief, thinking we're going to, have a bigger rollover. We did actually pull back to, 93,000 and test those kind of areas. But with Bitcoin, you just have to understand the demand there is absolutely massive. And if we have a look back to where we were in the last bull market, would you believe we're in the exact same spot? And in terms of almost timing wise and in terms of momentum wise. And I was having a chat with Joe in the fund just before, and I didn't realize how bullish I was until we started talking. And because Joe was thinking about being, he was feeling more defensive, and in a way we came to a really nice compromise together in how we felt with the market. But when we started talking, I was just looking at everything and I'm just saying, look, this just feels like we are on the edge of the markup phase. This is right. We're exactly where we should be, where we were last time. And it's the kind of feeling that you get, like things are just popping, but it's only just the initial stage. It's just the entree for the main course. And if we're just having a real broad look, this is the Bitcoin market. Your current is just Binance, doesn't go all the way back, but let's just have a look. So we've got the Fibonacci extension levels already drawn through here. We're starting to contend with 100K around that. It's absolutely beautiful. But as we were looking at the, just things across the fund, and we're just thinking, all right, and Joe mentioned to me, things are looking a little bit overheated on the weekly RSI. And I said, are they? Not that aggressively. I was just pointing out, so I don't think they are. I think this is just power zone level that we see every single bull market around this same level. And if we zoom back to where we were in 2020, December 2020, let's just have a real zoom in here. So this is where I think we are. I think we're just on the verge of cracking 20,000, which let's just say in this example is 100K. So we're at that level there. You could also argue that we're past that 20K level at 73,000 when we had to move up, sure. But let me just have a look, where we were in that kind of instance on the RSI. We're around 82, through this area we were even at higher, 88, that type of region on this weekly candle when we had the explosion out. Where are we now? We're actually a little bit further behind. We have, quite a bit of fuel higher. So we're only at 75 here. And that's the thing with the weekly and the monthly momentum and RSI. You can almost use it as a guidepost for the path of where the market's going. It doesn't mean it's going to roll over immediately, but if we're starting to see, this, and it's going to give you time, and that's the way I think about it anyway. It's going to give you time when you start to see this sort of, cluster of readings above certain levels, and then you're starting to see roll downwards. Then you're starting to see bearish divergence. You're seeing momentum rolling over the market. As you can see, people are going to panic too early. They're going to want to take a bulk of their profits out too early because they've got recency bias of what's happened in the last 12, 24 months. And they're going to want to get out of the market too soon. And likewise, they're going to face the opposite problem towards the back end of the market, where they hold on too long and they miss those big drawdowns, or they hold through into the next bear market. That's what we just don't want to be doing. But even earlier in the year when we're through this region, we had quite an extended period as we're just doing up only through this region, where we made high readings on the RSI, had a bit of a retrace back to the 70 level power zone, then again back up. So it's not the be all and end all. It's not a clear signal that it's all over. But from that if we're in the exact same spot, December 20 over here, the year of the halving, and we're over here in December of 24, year of the halving. Essentially, I just can't get over how closely these cycles mirror each other in many ways. And I think we're in the exact same spot. Even Ethereum was moving at this point back then at that cycle as it is now. And the rumors of Ethereum's death have been greatly exaggerated. It's funny how that works. No one wanted a bar of Ethereum, and now it's starting to move. And now everyone kind of feels a bit underweight Ethereum. They're unsure about it. They're thinking, oh, well, this could actually still go back to $5,000 quite easily, really fast. I mean, there's a lot of people short it. There's a lot of people not exposed to it. So any level of spot buying, especially with the ETFs, when we saw record inflows, can really push Ethereum higher. But it's not so much Ethereum that I'm, the asset that I really care about here. It's Ethereum as a big spotlight for the rest of the market.